Hello everyone, Dividend Enjoyer here, and today I'm going to be doing a stock analysis video on Microsoft, ticker symbol MSFT. I think that Microsoft is an amazing business. I think that it's maybe the best in the Mag 7. It's either, in my opinion, Microsoft or Amazon are the best companies in the S&P or just the Mag 7, period. I think that Microsoft is the same type of business when you really break it down as Amazon, because Microsoft has a lot of big cash cow types of businesses like Office, their operating systems, and Xbox, even the Games Pass. They operate with a lot of businesses that make them a lot of cash flow. And then they have the foresight and the ability to be able to invest those retained earnings into other vectors of growth. So I think that this is a great company to own for the very long term and hold for a very long time. Usually this company trades at a premium, and I think that it's actually acceptable to buy this company at a premium because of the way that they're so knowledgeable in the tech space just in general, which is usually a very lucrative space. They don't have a lot of debt. They're able to continue to increase their revenue over time. And I think overall, if Microsoft is ever trading at a discount, it's a very wise move to buy it and hold it for the rest of your life. This company continues to be able to show that they're able to grow. They have economies of scale, and I think that they're going to be the future with all of the different products that they're offering. They have Azure as well, which is a very good source of growth for the company. And I wanted to do a stock analysis video to see if I wanted to add some more Microsoft to my own personal portfolio. Currently, I have about $2,000 worth of Microsoft in my Webull account, which I've talked about a few times on the channel. For my Webull account, all the stocks in there, it's mostly just Energy Transfer and Microsoft. They just sit there and I collect the dividend. I don't really trade it. I don't look at it very often, and I don't really think about it that often. I am down pretty significantly on my Microsoft stock, so I thought it would be a good idea to do a full stock analysis video and see what I thought a fair price to buy into Microsoft would be, so that I could maybe add some to my Chase account, because I think that this stock is a very safe, reliable play, and it continues to show that it can grow over time pretty consistently despite the high valuation. Microsoft over the past year is down 3.18%. Its market cap is $2.92 trillion. The price to earnings ratio is 31.68, and the annual dividend yield is 0.84%. A year. The 52-week low is 381 and the 52-week high is 468.35. And we could see that the stock is trading kind of close to that 52-week low at $393.31. So that's usually a pretty good thing when the stock is trading near the low, because you can get in at a pretty low price and hold an amazing company. Overall, analysts are generally very bullish on the stock, with 13 out of the 57 issuing a strong buy rating, 39 out of the 57 issuing a buy rating, and the rest rating Microsoft stock a hold. The analyst price targets range anywhere from $420 to $650, with an average analyst price target of $506.25. The stock obviously currently trades for $393, so even the low analyst price target is higher than what the stock is currently trading at. So analysts on Wall Street clearly very bullish on this stock in general. I think that this is a good sign that the stock is probably trading too low. We're obviously going to look at the DCF valuation, but I want to say again, when I look at stocks on my channel, there are some stocks that are clearly value traps that the DCF model shows are very undervalued, but it doesn't take into account more nuanced things like future growth or, the quality of what you're buying, if they're going to be able to continually grow past that 10-year mark with the terminal value. I think that Microsoft has a very promising future, and really it's a monopolistic type of company with multiple monopolies and huge cash flows that they're reinvesting back into growth areas that they will then turn into even more monopolies for the shareholders. So I would even be fine personally, and again, this is not financial advice, I'm not a financial advisor, but I would personally be fine with buying this stock at a slight premium, because I plan on holding it for a few years, and in a few years the cash flows are going to improve, and I think that they're going to be able to continue to grow. I mean, that's kind of my thesis with Microsoft, and the people who have bet against Microsoft do not have a favorable amount of outcomes over the history of the company. So now that I've kind of gotten that out of the way and my thesis for why I think Microsoft's such an amazing company, I think that we can move on to the DCF model valuation portion of the video. Here we have the weighted average cost of capital for Microsoft. I calculated a weighted average cost of capital of 6.68%, and we can see that the debt to equity ratio is extremely skewed towards equity, and that kind of lines up with our our cost of equity, of 6.759%, calculated using CAPM, compared to our cost of debt after tax of 3.256%. That cost of debt after tax is pulling our weighted average cost of capital a little bit lower, but 97.76% of the company's overall value is in that absurd market cap, and only 2.24% is in the debt weighting. So obviously, the debt effective cost of capital is going to be a lot less influential than the equity side. Moving on to the DCF model, we can see that the average revenue growth for Microsoft is about 11.83% per year, which is quite impressive for such a mature company. You kind of wouldn't expect a company that's this old and this big to be able to grow at that kind of a rate. So it makes sense that the consistency is very highly valued, but we can see that the trailing 12-month is lower than the 2024 figure. That's probably because a certain quarter wasn't as good. Cyclically, because that's usually how a lot of companies operate. Some quarters are much better than others just by the nature of the business. But I do want to say that I am going to be modeling this after the most recent cash flow, which is 5.45% lower than the 2024 figure. But that does include the most recent quarter, so I just thought it would be better to model off of something more conservatively, just because I would rather model it and be more scrutinous and get a lower fair cost for the actual stock than value it the other way and show that it's dirt cheap when it may not be. So I really like my models to work against my stocks so that I can really see that it's undervalued if it is undervalued, and factor in some potential things that may happen in the future, like, political events that may affect it, like tariffs or other things that are just happening in the market now. Maybe interest rate cuts aren't what is expected. But we can see here that with a growth rate of the free cash flow of 11% over the next 9 years, the stock is valued at $414.59. Now, the average free cash flow growth rate is 6.62%, but this is being pulled down again by that trailing 12-month number. But we did have actually a shrinking of the free cash flow from 2022 to 2023. And I do expect that Microsoft is going to be investing a significant amount of money in CapEx with AI, along with the rest of the tech companies. So I would actually expect the free cash flow to shrink more. But I think that this is going to cause higher growth for Microsoft in some way. I think that they're going to be able to learn things that are able to be applied specifically to the company at worst. And at best, they're going to make discoveries in AI that are going to lead to even huger free cash flows just on their own that also have synergistic effects across the enterprise. So I think that they're on the cutting edge. And, you could say that all day. I know that certain companies like to say that in the case of Tesla, they like to say that self-driving is 1 year away, or other companies will say that they're spending all this money on AI and not getting any results. I think that we can look objectively at the free cash flows that Microsoft has. We could see that there is probably a decent opportunity here. Now, if we change this to 9%, though, we can see that there is a downside of 8.86%. So the stock still has a pretty lofty valuation, but like I said before, you are paying a premium for the quality of this company, and this company is still very strong. I don't think that they're going to be affected as much as a lot of other companies with the tariffs, specifically in the Mag 7. When you look at a company like NVIDIA, they're obviously going to be affected by tariffs a lot more because they're selling more physical goods. Apple, I think, is going to be affected extremely. Tesla, we've already seen a lot of countries putting in tariffs because they don't like Elon, and just in general putting in tariffs against the United States. So I think that they're going to be hurt more. I think that Amazon could be hurt more with maybe their overseas packages that they're delivering getting tariffed and things of that nature, because obviously it's a very expensive business to invest into the warehouses and things like that. So Amazon could be hit with tariffs harder than Microsoft. I think that's very likely. But all that aside, Microsoft does have very high expectations, and it does have a record of being able to beat those expectations. And again, I did model this fairly conservatively, and if we actually change the model, so I do think that it's very possible that they could get 11%, but if we model this off of the 2024 number strictly, at a 9% growth of the free cash flow over the next 9 years, with our discount rate of 6.68% and a perpetual growth rate of 2.5%, we can see that the stock is valued at $379.10, which still represents a 3.61% downside. But like I said before, if this stock is close to fair value, I think that it is a buy, because really this is misleading, because I think that it's very likely that this terminal value should be significantly higher, because this company has been able to demonstrate that they're able to grow at a very high rate for such a long time. And if you're looking to buy a stock for over 10 years, I think that Microsoft would be a great play, just because of the consistency of growth that they have and their consistency of beating the estimates just in general. Now, if we use this number and we place it at a 12% growth of the free cash flow, we can see that there is 20% upside on this very conservative model. And if we change that back to the trailing 12-month number, which is just the last 12 months of performance, we can see that the stock is worth 13.31% more than what it's trading for. I think that Microsoft is probably a great buy, and I think it's a very conservative buy when you look at all of the different companies that are kind of selling off, just because of the amount of safety you get. And I think that when you're investing, you need to play it kind of as safely as possible with as consistent growth as possible. So if you're missing stocks in your portfolio that will consistently grow over time, and you don't really have to worry as much about, just stagnant growth or extreme risk, I think that this could be a great add to your portfolio. And I may add more Microsoft to my own portfolio. Currently, I'm being a little bit more risky and buying into Salesforce, because I think that the growth potential is actually higher with Salesforce. And one thing that I think you can say is a real negative about Microsoft is that they're involved in a lot of different things, and they can't put all of their best talent into one sector that could make a multi-billion-dollar company. For example, I think they really messed up on phones. I think they messed up with the Zune. I think that they've had a lot of blunders, but one thing you can always say about Microsoft is that they are at least trying. If they didn't try to venture into new markets, they might not have invented the Xbox. And that's obviously a huge industry for them. I think it's very monopolistic and continuing to grow for them. They've been kind of silently acquiring different companies that make sense. I think that they're on the forefront of AI. And overall, I think that this is as quality of a company as you can get. And I would not fault you for wanting to buy this. The only thing I think you would have to be cautious about with buying Microsoft is that you could look at some of the other Mag 7 names that have also dropped, and perhaps you could see that one of them may be a better buy for your own portfolio, or for your own opinion on how you think the stock is going to move. I do think Microsoft is undervalued at this current price, but there is opportunity cost when you buy Microsoft versus buying a Salesforce or something like that it could have greater gains into the future. But with Microsoft, you have, like I've talked about so frequently, is the amount of safety and consistency in the company, and the nature of having such a large market cap company means that it has more advantages that other companies just simply won't have. They can use their money and leverage it to buy the strategic acquisitions that makes the most sense to them and increase shareholder value. So I think that Microsoft is probably a buy here. I think as long as it remains under $400, you could probably safely buy into this stock and hold it for a very long time, because I think that this stock is going to continue to generate more revenue, higher cash flows into the future, and continue to provide shareholders with a lot of equity. I just think it's been a bad year for them overall. And I think that betting against Microsoft is very similar to betting against America. There are bad years here and there, there's some inconsistency, but everyone who's done it eventually has lost in the long run. And I think that this stock is an amazing add to your portfolio. Now, please, if you've made it this far, please hit the subscribe button, please hit the like button, and leave a comment for a stock you want me to do an analysis video on. Thank you so much for watching. Bye.